But if Russia's done this, and I'm sitting there and I'm managing Japan's money or the book of another nation, I'd certainly at least be thinking, well, geez, because it's not like Russia did it for some mystery reason. I mean, Putin came out and said exactly why.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you on Thursday, July 25th for this week's Arcadia Weekly Market Wrap-Up. Fascinating things happening around the globe. Again, didn't have a video last week. It actually was recorded, not posted yet. I was traveling to the Sprott conference, which was incredible. A lot of interesting ideas going on there, especially in response to all the things that are happening in the world, which we were about to dig into. But on a quick note, we'll have that posted shortly once I unpack and find my memory card reader. But anyway, on to what's happening now. In the past week, Donald Trump has come out and been critical about the Fed. Essentially, he's saying he's not happy about the Federal Reserve rate increase. Not surprising to hear a politician not happy about the rate increase because, again, just in the same way that lowering rates and printing a lot of money made a lot of things appear better. They gave a stock market bubble, a housing bubble, a bond bubble. You naturally would get the same exact effect when you're unwinding that policy, which is exactly what's happening now, exactly why we're seeing pressure in the real estate market in particular now. And Donald Trump is not happy about that. Again, I'm actually really curious to see what Trump does because, there's what he says, what he does. And also within that, in regards to the Fed, he has in the past mentioned a gold standard. He did say the stock market was a bubble when he was campaigning and talking about Obama's policies and what Clinton had done. So he kind of goes a little bit back and forth on that. And sometimes I wonder, does he realize that the whole thing exists solely on printed money at this point? Again, in terms of the debt, the projections are now talking about 30 trillion. So hard to figure really what he's doing here. He wants lower interest rates, which certainly would not be a pro-sound money Austrian economic view. Although with all that said, I continue to think that whatever we are hearing in the public is probably a lot different from what's actually going on. Again, we're living in a world where the U.S., the most indebted nation in history, is launching a trade war against its largest creditor. And then why not just top it off? Now, China and the European Union and others have been manipulating their currencies and interest rates lower. Well, certainly you're not going to get much argument for me that governments and banks all manipulate currencies and a variety of other markets. Again, it's just, they're all printing money. Europe has a negative interest rate. China is experiencing credit troubles as well. But again, that would be fine to say, except given the past decade of Fed policy where really some unprecedented amounts of currency manipulation. So they're all currency manipulators. They're all paper currencies. They're all eventually going to run into trouble at this point, which is why I find it so interesting to see what's happening in Russia, because as I've been writing about for Miles Franklin, I guess it was April, Russia sold half of their U.S. Treasury holdings. And then in May, they sold virtually the rest. I think it's down to 15 billion at this point. So yeah, 14.9 billion is what they're listed as in May. There are varying views on whether they are, again, that's not necessarily a huge amount in terms of global finance, but there are some who feel that they've been using those proceeds to invest into gold. Certainly, they've been increasing their gold holdings rather steadily. And few quick comments on this that I think are worth bringing up, which is that we saw the yield on the 10-year U.S. 10-year note sit right under 3 for about a month or so. Finally went up to 3.11% and then got hammered the day that we heard the latest news about trouble in the Italian bond market. And so the rationale we were sold was that there's a flight to quality, as misstatement as that may be, for the U.S. government Treasury. Yet, so at the same time, the Fed is supposedly not buying bonds. They're raising interest rates, walking away from quantitative easing. Now we find out Russia was a massive seller in April and May, and this is at the same time that the market rallied, which makes you wonder who is actually buying all of these bonds. And because at least from an intuitive market standpoint, sure, I would imagine there were funds that decided to say, let's invest in treasuries when there is chaos in the world. Yet I am coming more and more to the view. Rob Kirby, an analyst you may be familiar with, who I like, mentions this often, but there is something called the Exchange Stabilization Fund. Essentially, at least the story that the public was given, which, and whoever knows these days, but after the crash of 1987, Reagan came up with this, basically, that prevent market collapses. Now, if something is worthless, are you preventing, is that good or bad to prevent a market collapse? Certainly the free market economists would argue against that. But in either case, interesting post worth checking out here, because if you go on Arcadia, scroll down to Is There an Unseen Hand in the Markets? And there's a video series. Here's part 1, which highlights a lot of stuff, some of which I can confirm, some of which I could not confirm, yet nothing that really would surprise me as that shocking to be true. And certainly you really begin to wonder who is propping up the markets at this point, just from the degree that the natural supply and demand, you have everybody giving, either walking away from the treasury market, shouldn't say everybody. But if Russia's done this, you know, and I'm sitting there and I'm managing Japan's money or the book of another nation, I'd certainly at least be thinking, well, geez, you know, because it's not like Russia did it for some mystery reason. I mean, Putin came out and said exactly why, and he was right in what he said about the dollar and not having faith that it's going to get repaid outside of being printed, which is another form of default. So we'll see how that all unfolds. Just fascinating. And I don't know how much closer we could be to a break point without actually hitting it. Quick look at the crypto market. Bitcoin had been back over 8,000 for a couple days. So again, crypto is near their low going almost a year now, certainly before the rally at the end of 2017, a lot lower. But have stabilized and rallied a little bit in recent times. As for silver, still basically at the cost of what it takes to get it out of the ground. So again, while the timing of when this all happens is unclear, certainly add in Deutsche Bank downgrade, again, let alone Italian bonds, all the other European bonds that are having trouble. The continued trouble concerns you hear out of China as well. You have a global bubble. It is coming to an end. I continue to think it'll be in 2018. We'll see how it goes, but leave your comments below, leave any questions, and hit the subscribe button. Thanks as always for watching, and I will see you next week.